Welcome to Impact Headlines. Indian growth slows to 6.5% in Q3 2024. JP Morgan forecasts oil prices to close below $70 per barrel in 2024. Eurozone PMI down to a 10-month low. Reuters reports that the Indian economy is expected to grow 6.5% in Q3 2024, its slowest in 1.5 years. This sudden drop is due to a decline in private consumption, which accounts for 60% of GDP, and a drop in corporate earnings. Rising food inflation adds to cost of living concerns. This drop comes amidst forecasts for Indian economy to soon become the third largest economy, surpassing Germany and Japan. Impact on Sri Lanka. India's economic slowdown could impact foreign direct investments into Sri Lanka, particularly when India is expected to be the largest FDI contributor this year. India also accounts for about 65 to 70% of Colombo Port's transshipment volumes. Further, India is now Sri Lanka's largest tourist source market, attracting over 349,000 tourists up to date this year. JP Morgan Bank expects oil prices to close below $70 per barrel and average at $73 per barrel in 2025. This outlook is based on an anticipated surplus of 1.3 million barrels per day in 2025, leading to an oversupply. The bank predicts that China will lead global oil demand for the last time next year before India takes the lead in 2026. These projections assume that OPEC Plus maintains its current production levels. Impact on Sri Lanka. Sri Lanka's high dependency on oil imports means a drop in oil prices would provide much-needed relief to its foreign exchange reserves, which, despite recent improvements, remain critically low at around 4 months of imports. Additionally, reduced oil prices may ease energy and transportation costs, supporting broader economic recovery efforts. Eurozone PMI fell to 45.2 in November, a 10-month low from 46 in October. A contraction in both manufacturing and services owing to a drop in new orders, shrinking workforce, and reduced purchasing activity contributed to the low PMI. Cyrus de la Rubia, chief economist at Hamburg Bank, warned that a weaker euro coupled with potential EU counter-tariffs could raise purchase prices. This downturn coincides with President Trump's plan to impose a 10% tariff on all EU exports to the US. Impact on Sri Lanka. The Eurozone is a key market for both Sri Lankan exports and tourism. During the first 9 months of 2024, exports to the European Union reached $2 billion, marginally lower than the same period last year. The Eurozone's sluggish growth affects Sri Lanka's export earnings and European tourist inflows. And that's the wrap for this week. Subscribe to our YouTube channel to stay updated on the latest developments in Sri Lanka.